Good afternoon. It's Friday, guys, into the close. Gonna hit on markets, and then I'm gonna highlight. I'm gonna do a piece this weekend on what I'm calling the last bounce, and it mostly refers to the equity markets and this multi-week rally we've had off the lows. Um, and then also, I'm just gonna give you guys an opportunity. I changed the site and the product around. I've never done pricing like this before. This is the deepest discount I've done, and I'll kind of talk about why, but I know there's a lot of people in a pinch, whether it's small businesses to just anybody that's been affected by the lockdown, which is obviously everyone. Um, and hopefully some of you are getting um, some money in from some of these programs that are going on. But I just would encourage you. I know there's some of you that are on the fence, and like just the prop program alone is usually $5,000 for the year. And I'm going to show you guys the details at the end of this video, but I knocked down and get all our courses I've ever built, all our programs and memberships from Cycle Edge to the options program to the prop program for one ridiculously low price. So I'm going to talk about that at the end and where to find that. So if some of you guys are getting cash and stuff that's coming in, whether it's your tax refund, I think you want to think about investing in yourself. And some of you just told me you're waiting on that, but I think what's about to happen to this economy, what already has happened, I don't think a lot of people understand it. I think the smart money gets it. I think if you've been in markets a long time, or if you traded through any of the other bear markets and recessions, you know, I'd say the good thing about what's happening right now is these centrally planned markets, we're about to find out how they don't work, and an economy is not run from one central point, from one central bank, or from one capital inside the country. And locking the whole thing down when you have dislocations and you have some areas that have an issue and some don't, clearly there's loss of life. Clearly it's a sad thing. But completely ruining a family's livelihood is another thing, and it matters just as much. So the problem with what's occurred is that this isn't Humpty Dumpty. You can just put everything back together in a couple of weeks. When you lose this capital formation, when there's capital destroyed like this, businesses just can't reopen. If you take your whole life savings, you put it in a restaurant, you've only got a few weeks of cash flow, let alone 2 months, and then that's it. There's no selling your business and hitting a bid and getting your cash back and going to the next county down and saving up for a couple weeks and starting again. It takes time. So this isn't some bounce back. We've got to go through a credit cycle, which means a bankruptcy cycle, which means write downs, which means the higher levered companies that are worse off can't raise capital. We got to go through that cycle. When you lose 22 million jobs, guess what? There's something called a consumption cycle. Those are all the late cyclical components of the economy. Once the job cycle breaks out, it's the layoffs, then it's the consumption. The consumption in this economy is 3/4 is consumption. So all that data has to get worse before it can get better. And then you're gonna have I'm not cheering it on. It just is what it is. And so I'm trying to make things easier for you guys to be a part of these teams where I've had my best 3/4 since we started this company in the last 3 months. Absolutely killed it. I've got guys taking accounts from 10,000 to 100,000. You think $80,000 in 1 to 2 months just trading these markets from home when you can't go out and earn a living a lot of other ways? I mean, what is more beneficial? Is that worth literally what the prop program is basically? I cut all these prices to the same price that some of you are getting back in your stimulus check. So I would say be wise, invest in yourself and a team that's gonna protect your hard-earned capital, but then we're gonna compound it and actually come out the other side and take advantage of this. So anyway, that's my That's just what I think from a perspective of um, the opportunity going forward and how to make the best of all this shit. But let's get into the markets. Let me take these orders off. All right, so the last bounce, and what I mean by it, this rally in equities, most likely the probability is it's going to be met with a lower high. So right now the narrative is, and the hope is, right, especially from the bulls and the perm bulls and the long only community at Wall Street, is that we're going to get the V bottom and everything goes back to normal. So I already kind of hit on why I think that's just the false reality. But from a model perspective on price and time, I keep talking about we've got two cycles really going on. So let me back up, I guess, first off my end. So this is key. So there's several different cycles, but we have the 8.6 cycle, which is a kind of more of a standard sine wave, and then we have an equation of motion, which is just a stochastic reading. And we don't treat this as overbought, oversold. We treat this as an oscillation through time. So it's a cyclical indicator for us. And just counting, here's on the weekly chart, S&P is on the right. This is 9 weeks up. It's 8.6. Sometimes you're going to ebb and flow. You'll make a high on 8 days. Sometimes it's 9 days. It's a little bit relative. But if you count, boom, first cycle off the lows from 2008, which is essentially where the market needed to test after we broke, considering everything. Okay, and then I'll show you in a little bit where I think where we actually need to test lower in the October lows. But then you had another cycle back into the high here, peaked exactly. You had a mid-cycle move to a higher low, followed by a bounce basically back to the double top. Then we cycled again into a low. Again, 4 weeks up, and kind of did an inverse to here. Here we had we had a mid-cycle turning point, and you did the same thing here. So mid-cycle down, and then a lot of time you'll get turning points in the mid-cycle. But this here marked the low, and then we had essentially 2 cycles into the high, and then actually we peaked the high close here, and then this cycle was 9 weeks into the exact low on this week. So from here we've had, whether you want to count this as this as 8 weeks down, and this week number 1, that'd be 1, 2, 3. This is the 4th week up. But essentially, I think we're in either a mid-cycle turn here, and it's back down for another 4 weeks from there. I mean, you could go sideways for 4 weeks, but you wouldn't really see another turning point for 4 weeks from today, which would put you into the first part of May. But anyway, so we're at a mid-cycle point here, and then yeah, could we rally for another 4 weeks? I mean, anything's possible, but just from a turning point perspective, that's kind of where we're at. And then you've also got the stochastic, which I keep saying is only about halfway up, so that puts you for a turning point in the beginning of May. That lines up with some of the other guys and things we've watched, just like Marty's computer model. So that's what the weekly picture is. So there's still a lot of patience. We've been pretty patient on our longs. We're starting to feed into more shorts and getting more bearish, but we've been pretty good putting some longs on and been working the long side, covering shorts well, and then slowly putting out the shorts, but not. And I was talking to the guys in the prop room today. You don't have to be all in short, all in long. That's not the way to trade. The pros go long, short, especially the global macro. Guys that know what they're doing, and then we're feeding into and trading around those core long ideas or short ideas throughout the cycle. But we're starting to get to levels where I'm less interested on the long side and starting to kind of lick my chops on the short side. The daily cycle has some interesting spots. You have this daily stochastic cycle that we came up with into this week, and I thought we had a good shot at maybe breaking lower, and we just couldn't break what we call the swing line, take out the prior day's lows, and then you can see the 8 is still rising. The 8 does a good job of showing you the intermediate term, right? That's kind of the fractal nature of what we like to use, the 8-period moving average. The direction of that gives you basically the trend on the 30-minute, hourly, 4-hour. So we're in this kind of crossroads. Are we going to continue up maybe into pi here, which is around just in front of 3,000? Maybe the options community has some strikes, and the volatility guys, maybe they care about 3,000. I don't really have a good feel for the convexity of that on the inside, but wouldn't surprise me. And then that we could easily be topping out here on the news overnight. Last night on the Gilead news, and Trump's pumping it into the close, and we could easily cycle back down, and maybe this is the high right here at the band. So we're in the latter part of the later innings of this rally, which commenced on the 34th down here in March. So this is what I mean. This is, I think, your last bounce. If you think we're going to go right back to new highs and everything that's happened in the last month doesn't matter, and you can just shrug it off and be at new highs, I mean, I don't think you've been through a cycle where you've essentially, not only did jobless claims break out, but they went to some of the biggest rate of change acceleration and some of the biggest numbers, and the percentage of unemployment. We've done significant damage. You think even if you take all that aside, when you have this big of a move down and then you try to bounce back up, what we call the wall concept, it's very difficult for the bulls to take out that entire bear wall. So the probability of a 50% retrace, a 618, there's no doubt it looks like there's a short position that has been for several weeks in S&Ps. That's part of why the market's continuing higher. But a final squeeze much past, I would say, that this midpoint rally we had in the beginning of March is very, very unlikely. The probability is much lower. You make a lower high and then actually absolutely get smoked. So the game is, you can still nibble or pick your spots on the long side. But these are light longs, and then these are light shorts that we're feeding into. And if and when, which we will get a turn, and then where the intermediate term starts to break down, we'll hit it harder. It's kind of similar to what happened back here. We went over this on the Russell this morning in our prop room. Same thing. It was feeding the Russell short lightly, and then we broke the 8, and then you broke the 8, which is intermediate term here, what we call the TMS on the intermediate term, and then we broke the daily right here. Those two breaks, boom, boom. Those were your sell signals. I think I even have it on. Yeah, so there were the two breaks, and there was sell signals here, and then we were reshorting that bounce, and haven't put out any major big picture sells yet. Just kind of, again, what I've been saying is a small core short. My NASDAQ core short is from 69.70, and I didn't even sell into it, guys, on that open last night. I just came out of some longs, and that's the thing. It's never all in or all out, or having to be constantly picking the perfect time to be long or short. You can work both sides and work the turn. That's pretty much it for equities. I think that's the big driver. We're still dollar bulls. It's been a little bit choppy. I'm just hitting on a few more markets quickly. So huge move down, whipsaw right to a new high, and we've just been consolidating. I still think the next move is going to come with the next risk-off rally where we're still making higher lows. We take out this kind of pivot, this ascending wedge. You take this out, you easily could have another major leg up on the dollar with all the backtrip and liquidity crisis. Even if this is down the road, you want to talk about digital currencies and governments moving, the dollar is going to be the last one that gets the rug pulled out from it. You're going to have Aussies go first. You're going to have what about the euro? What about all these other emerging market currencies that are far less um, meaningful in the big picture scheme of things? So there's still a dollar shortage. We're still dollar bulls. I wouldn't really change that unless we took out the low at 95. I mean, there would be some defense to be played if you took out 98 on the dollar index and you got the euro above, euro versus the dollar, call it above this 112 area or pi. But even then, anytime you've had an intermediate term move like that, it just gets met with long-term lower and lower highs on the euro. So we're still course short. We're trading around the daily cycles. You guys should join the Cycle Edge team if you want real-time alerts on that or anything we're doing in currencies. And then the other thing, big picture, is gold still looks good. It's had a great move. That's going to continue to perform well. Like, it'll have its times. Like if we sell off hard the next couple of weeks, yeah, gold can get hit in the liquidity type of selling. We saw that obviously in March. That could easily happen again, especially if we go to where I'm talking about on the weekly and monthly levels, which is down here, the October lows. Oh, sorry, that's the NASDAQ. I think NASDAQ should go back to pi, no problem, which is down at 6,000. It's a little bit more bullish because it was one of the best performers at the beginning of the year, but we still like short high beta when you're in these risk off type of environments, growth collapsing, inflation non-existent, basically in deflationary moves. The lows back here from 2016, I think, is in play, big picture. So 16,000 on the Dow, 1,800 in S&Ps. Anyway, that's the level I was highlighting. So we get this next big risk off move. Yeah, I mean, gold might get hit, but long term we're still bullish. And then here's treasuries. I highlighted this with my guys today. I mean, treasuries were the first to rally with the Fed having their emergency meeting. This was that Sunday when they cut, and then it moved so fast it needed to pull back, but we've just been very firm. The Fed's in there buying. This has been a great bull market, so stay on the long side of treasuries. Just keep adding and reducing until tens hit the zero bound. And then from there, I mean, we'll just have to see what the hell's going on at that point, if we can go negative or not. But maybe in the front end, the 10s to 0%, that's probably most likely scenario setup if we do get the lower high and another risk move down. All right, guys, that's all I got. It's been a good week. As we make a little bit more money in the risk off scenarios because the vol picks up and markets go down a lot faster. But just if you liked what I said in the beginning about everything that's going on, if you want to take some of your control back in your life from earning a living, if you want to earn more income or another revenue stream. I mean, this is not trying to go out and learn day trading on your own or where somebody doesn't have any experience. I mean, this is 15 years trading professionally, 15 years trading directionally and earning a living from the markets, not doing anything else. And whether you want to learn futures, Forex, all my courses I have, jenkinscm.com. If you're new to Forex, and we're trading that every day. Here's one of my accounts, fx.com, FX book. And this just shows you some of the consistency. We know how to work core positions, day trade around our core positions. 49% since I threw this account up on here. Win percentage is at 96% this month. So all these trades, and you want to learn this market, you want to learn how to do some of this stuff. It's a skill that you can have the rest of your life. So Pi Cycle course, that's one of the simplest, most powerful concepts I came up with. It's all cyclical. Our entire directional model, which is a 9-hour course. So I go through analysis, execution, psychology of trading, risk management, our whole fractal process. I talk about the origins of the model, has to do with energy and wave formation, vibration, a lot of physics stuff. And then that in itself is an amazing course, guys. It's I've had it at $3,500 before. It's usually $2,000. The options course and our options team is all our option signals. I walk you guys through the exact plays I'm putting on, whether we're taking longer positions on Apple, or we're trading the volatility or the VIX index, or we're taking puts spreads on oil. That's all special options training. It has to do with the model. That whole team. So the entire comprehensive course package, guys, used to be $5,785, and I'm doing it now. The special pricing. If you come over here to memberships and just scroll down here, this is I have it listed under the prop program. That's where you used to get access to that, and this you get the special price. So with this whole economics, I calling it the economic crisis package. But $2,500 gets you just get you guys on the team. The prop program, what we're doing, every day in here as a team. Recycle Edge, which is all our real-time alerts, everything we're trading, long-term, short-term, currencies, equities, commodities, and then the prop program. You're with the prop team too. Again, you're gonna have access to all this. But Options Edge. These are the plays that we're doing on the VIX. But just being with me every day, I mean, the coaching I used to do just 8 sessions, and that was $3,500. And now it's $5,000, but I put all of this together for $2,500, guys. It's 50% off. You can trade with me every morning. This is where we do all our coaching. I teach you guys how to journal your trades, how we work on the right actions, the wrong actions, and that's the whole process of having a coach. Is yeah, it's great. One thing for you to learn this stuff, but a lot of you have bad habits, and part of the consistency is just getting rid of the things you're doing wrong. And if you already had all the answers in your own mind, you wouldn't be where you're at. You'd already have the breakthrough. You'd already be consistent. You need a coach. You need somebody to come outside of your thinking. Say, hey, have you thought about this? Okay, let's look at what you're doing. Okay, so it looks like you're doing this, this, and this. Why are we doing that? You're doing this right. All right, good job there. Let's focus on continue to do that. But you just need to get rid of these 3 things. Boom, 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 boom. And it's hard for you to see that stuff without somebody coming outside of your own thinking, outside of your own brain, and asking you those right questions. So we work on that in that group. That's just worth a lifetime of profits to you guys. All right, sign up for that. I don't know how long I'm going to do this for. It's not going to be forever, but I think it's just important with everything that's going on. People's incomes are down, but at the same time, this is a good opportunity to just get in the game with us. You're gonna, a few trades more than pay for that. So I don't want to hear any money objections anymore. But anyway, all right, guys, have a great weekend, and let me know if you have any questions. Hit me on the chat, the YouTube channel. I guess sometimes you can comment there. I guess that's where this will be listed. And I'm going to do this report this weekend about how we've been making this recession call back since September, guys. It was talking about all this stuff going down with growth slowing and the profit potential in the treasury markets and euro dollars and gold, all that stuff. So I don't want you guys to miss out anymore if you're not on the team. And if you are, I'll talk to some of you guys into the close and then on Sunday night. All right, have a great weekend.